Okay, we're going to do our review of the dollar here. It is July 1st, so we have a new monthly candle, but we also have a new quarterly candle because it's a new quarter, Q3, and we have a new 6-month candle because it's now the second half of the year. So great additional data points to understand the bigger, longer term trend, understand how those patterns are developing. And so let's start with the daily chart. So the dollar, I believe, may have made a shallow daily cycle low on day 20. So these things often are called triangle consolidations. So notice the high came on day 12. That's what this 12 means here. Then we have a sharp low here on day 13. That following day, bearish follow through, swing high below 104.66, below this candle here. But then we just consolidated. Instead of following through lower, we just consolidated in this range, chopped around. Then we made a higher low here on day 20. And now we've moved out of that. Now, technically, we're still inside the range. We need to get above, 105.493 to truly be out of that range. And we're now getting a pullback here today. But this is so far looking like we're probably on day 4 of a new daily cycle. Now, doesn't mean it's going to be a bullish cycle or a bearish cycle. This is what we need to watch for. Is it going to be right translated or left translated? But the weekly chart will give us cues as well. So on the weekly level, this is week 4 of a new weekly cycle. So far, we have a top on week 2. And so I suspect we'll get a new high so that, week 2 doesn't become our high. That would be an incredibly bearish cycle. Whereas this looks like it's going to get some follow-throughs. Look, it's kind of smoothly riding that 10-week moving average. This looks like something that's going to grind higher. And if we look at the monthly chart, and so that's important. We're on week 4 of a new weekly cycle. Previous cycle topped out on week 17. The one before that didn't top out until week 26. So this thing could rally for like maybe 10, 12, even 15 more weeks. Who knows? And on the monthly level, very important, we're tracking the 3-year cycle. Easy math. That's 36 months, right? And so the low for that cycle came January 1st. And so we've been in a rally ever since. This is month 18 of that rally. This is month 18 of the advance of the 3-year cycle for the dollar. The previous cycle didn't top out until month 25, right? The one before that topped out on month 8. So you notice these things could top out really early or really late or somewhere in between. We're right now smack dab in the middle, right? We've spent 18 months going up. If we topped out here, we would spend, give or take, these things aren't perfect, just directional. We'd spend give or take 18 months going down. We'd just dribble down. And that cycle low would be due in January 2024, thereabouts. So now we sort of watch to see how this plays out. Everything about this suggests we're going to continue higher for several more months. Maybe we get a top month 25. Who knows? This is not a prediction. It's a scenario. And it's what we want to watch for over the next several months. Because when this thing tops out, like notice how this was a pretty grindy cycle. And we had the COVID crash that really kind of peaked the cycle. And so this was a pretty ugly cycle. But this one was really ugly because it was so left translated. But notice there are pretty sharp drops after these tops. Pretty sharp drop. That was a sharp drop. Another really sharp drop. And then another. So the point there is once we get that top, whatever month it comes on, we'll know it by seeing it. It'll be a swing high. The same way this is a swing high. That becomes a swing high once we get below there. That's a swing high once we get below there. We'll have a pretty long decline for literally months. And that is going to be a reprieve for risk assets. We're going to get some upside, I suspect, from crypto, from stocks in general. And so that's what I'm watching for very closely.